What is a futures contract? We'll get to that in a minute, but first, welcome back to another episode of Crypto in 5 Minutes, where I try to explain a single concept in the crypto NFT metaverse space in 5 minutes or less, roughly speaking. So, now that we know what we're doing here, what is a futures contract? I want to make sure to take a second and cover this. Dealing in future contracts is risky. It falls in the category of advanced trading techniques. Make sure you know and understand all of the rules and the details of the trade before you make it. A futures contract is a legal agreement. It sets you up to buy or sell a particular commodity, asset, or security, and that would happen at a predetermined price, at a predetermined place, predetermined time. In some cases, it's just financially settled. You're responsible for your financial gains or losses, and that's it. What is the net difference? In other cases, what's called physically settled contracts, those require both parties to execute the trade fully. One actually delivers the money and the other actually delivers the asset. I don't know how common that is in crypto though. Futures contracts are standardized for quality and quantity. This is to facilitate trading on a futures exchange. Now, the biggest crypto futures contract is the Bitcoin futures contract traded on the Chicago Mercantile Exchange. Now, those contracts, they're all financially settled futures contracts. So when you buy a futures contract, you say you're going to buy a specific amount of a specific asset at a specific time, and that time is the expiration of the contract. The seller is taking on the obligation of selling a specific amount of a specific asset at a specific time. You can see what's going to happen here, right? As we've talked about before, crypto investing is gambling. Here's an example. You're making a bet about what you think the future price of Bitcoin is going to be at a specific point in time. So if you buy Bitcoin on a futures contract, let's say you want to buy a whole coin at 40,000, right? In 3 months. The seller agrees to sell you one whole Bitcoin for 40,000 in 3 months. Who got the better end of that deal? We won't know for 3 months. It depends on what the price is at the time. So if the price is over 40,000, then the buyer got a good deal. If the price is under, then the seller got a good deal. So something else to know. Futures trading allows trading with leverage, which is very risky. But that's because you're not trading your USDT or whatever for Bitcoin. You're buying with borrowed capital. Every broker is free to set their own margin as long as it's above the exchange's minimum. Because Bitcoin is so volatile, the leverage levels can be conservative. But remember, you're not trading with coin you already own. You're trading with borrowed capital, so don't get wrecked. Pros. Futures contracts let you bet on a coin's price action without actually opening up a crypto wallet or account. They let you hedge your crypto exposure at a future date. They provide you with leverage using a margin account, and they have high liquidity. You can enter and exit pretty easily. The cons. You can't use futures contracts as money. If you're holding Ethereum, you can spend that Ethereum. If you're holding an Ethereum futures contract, you can't spend that. You don't even have the Ethereum yet. The amount they want for a margin requirement can be a lot for a retail trader, even for just one futures contract. And ready or not, the termination date comes due when the termination date comes due. Whether the market conditions favor your trade or not, you're still going to have to execute that trade. And you can only get into or out of your position when the exchange is open. The biggest takeaways really are that futures contracts allow you to trade with leverage. They provide crypto price action without buying crypto, but you can only change your position when the exchange is open, and it's really easy to get wrecked. Hopefully this gives you a better idea of what futures contracts are, how they work, and why they're risky. Thank you for joining us for another episode of Crypto in 5 Minutes. Remember to like, subscribe, follow, etc. so you get notified when we release the next episode. Remember, none of this is financial advice. And now that you're done here, catch up on the latest crypto news analysis with the latest episode of Crypto Overnighter. We'll see you next time.